Welcome to Where We Buy. It's the show where we talk with retail experts and visit the places where we buy. My name is James Cook. I research retail and real estate for JLL. And today is part one of our multi part European retail series. So, if you are a retailer that is considering or currently expanding in Europe, it can be very complicated, but it is also very rewarding. So we're going to talk about some of the details that such an expanding retailer would take into consideration. So our topic is turning European diversity into your retail advantage, and I have two European retail experts with me here today. So I'm going to welcome my two guests. First, joining me from Frankfurt, Germany. Is that right? Frankfurt?
That is right.
Okay, I've got Josefina Ulrich. Uh, and Josefina, tell us what you do.
What am I doing? Yes, as you said, trying to help to navigate through the complexity of retail markets. So I'm with JLL for nearly 13 years. And I'm supporting retailers with a strong focus on the European and EMEA region to enter markets, to optimize their portfolio, but of course, also supporting landlords and driving their portfolio strategy.
So your whole job is helping retailers expand. You know about the complicated nature of cross-border retail, and so that's why you're the perfect person to help kick it off. And then our other perfect person is Tjard Martinus. And Tjard, you're joining us from Amsterdam,
That's
correct?
correct. And thank you for having me on your podcast today. I think to come talk about sort of my background, I've been looking after European retail research and consulting for the past sort of over 10 years and working together with a lot of international retailers to grow their portfolios across Europe and also helping investors to understand where retail is heading towards to. And I think this is the first time in a long, long time where we are sort of very excited to talk about sort of retail again in Europe in the direction of the market. And there are a lot of signals out there that point in a positive way. And that's something that we wanted to discuss with you during this podcast.
Well, why don't we kick it off with that topic, Chard? So, why is now a good time, do you think, for retail in Europe?
The reason why we are so upbeat about European retail is that if you think back over the period 2008 and 2000 to 2019, the physical retail market was actually quite impacted quite severely by the rise of online retail sales. And the online channel continued to grow. And as a consequence, physical retail sales remained pretty much stagnant. We've now gone through a period of course, initially the COVID disruption, whereby a lot of the retail spending went towards online. We had a period of high inflation, which increased the operational costs for a lot of operators, including e-commerce operators, which have seen staffing costs go up, warehousing costs, transportation costs. The consequence of this now is that there's a greater emphasis on becoming more profitable, delivering a profitable retail model. And what this also means is that you can't just push for growth in a similar manner as we have seen before the pandemic. And this means that sort of we're now finally, after many years of stagnant sales, physical retail sales to pick up again between 3 to 4% a year. And whilst this may not necessarily sound spectacular, if you take into consideration that sort of like 40% of the retail spending goes to food, and we can only eat a certain amount of food, you can see that the increase in real spending will benefit discretionary retail spending quite considerably. So this is the first reason. The second reason is that we are also seeing that more and more retailers are becoming more equipped with sort of operating in this omni-channel environment. A lot of retailers are starting to organize omni-channel retail from their physical stores. And one thing I thought was really interesting is that Deliveroo, which is like a DoorDash in the US, and they for the first time, they reported profits. And one of the reasons why they were able to start reporting profits was the fact that they've been benefiting so much from collaborations with physical retailers, which allows them to increase their overall revenue quite considerably. So I think that was a very positive sign. And The second part of this is also that there are more retailers that very much believe that there is going to be growing need for better service, better experience. And some sort of retailers that you could pick out are, for example, sports brands retailers who believe that there are, with the aging population, there will be a growing need for helping people find the right products and sort of showing them what there is. And from that point of view, some of them have announced very ambitious store expansion plans going forward, are investing in their physical stores again. And I think there's a growing realization that there's still a lot of value in physical retail space. And that is, I would say, sort of a very important difference with what we have seen from before the period before the pandemic with what we're seeing now. And I think that's also reflected in a lot of the retail leasing activities, whereby we're seeing a lot of retailers securing new space across Europe.
So Josie, let's say I'm a retailer, I'm enticed by this kind of retail growth, and I want to enter a market in Europe, and maybe I'm coming from outside, so I don't know, I just know where I've been on vacation before. I don't know what the true sense of these markets is. Is it fair to say that retail or that real estate is very different from country to country and market to market? That, I don't know, lease terms are different. The way leases are structured is highly different when you go from country to country.
That is absolutely fair to say. And you already touched on a few indicators. Like you said, you've been on holiday into Europe, on lease conditions. Yes, if we look into Europe, well, that's more than 40 countries, different markets, and of course, a different setup, a different structure. We as JLL, we offer retail service in 16 countries. And I like to say, even within these 16 countries, we have like a setup of 20 different rules to consider. So when retailers look into Europe or come to Europe, they often enter the continent through the UK. And the UK is a great example. If you think of the UK, then you think of London, of course, and you open a store there, or maybe two. The market is big enough. And then you have quite of a presence, an established presence in the UK. And the same might work for France. You open a store in Paris, you have your footprint in that country. But then we look into Italy, and in Italy, you do have, of course, a key market, Milan, but also Rome is a well-known city. And then Spain awaits retailers with at least two cities, which is Madrid and Barcelona. And then you look into Germany, and that is where it becomes difficult. Germany has a very polycentric structure, so you have to consider at least 7 cities within this one country to build up a brand awareness in the market. And that is only the geographical difference between those countries. But as you said, there's consumer behavior, which is very different between, of course, local consumers, but also between the tourists. And then, of course, it's the lease regulations and lease conditions. So that's why we are here for. It's challenging, but also offering great opportunities.
Are lease terms significantly different? Like I would say in the US, maybe the historical average for a retail lease might be 10 years. I mean, how long are leases in different countries in Europe?
Yeah, 10 years is also a known term to most of us in Europe. It's not that long ago that the average fixed lease term was 10 years. But then you have country-specific regulations. Like, for example, in France, it's also very common to have a 9 or 10 years lease contract. But then it's regulated that the tenant has a break option every 3 years. So basically looking into it from an investor's or valuer's perspective, it's a 3 + 3 + 3 years lease contract. If you look into Italy or Spain, then lease regulations such as lease terms are very much driven by local law or governance. If you look into key locations in London or in Germany, then I would say the average is a 5 years lease term, which is fixed for both parties, for the lessor and for the tenant. But because of the high demand and the shrinking supply in those prime locations, we also see again that retailers want to secure premises for longer term. So again, we see many leases with a 10 years term.
Yeah, so kind of it definitely varies. So let's talk a little bit more about locations. Obviously, we've got high street locations, which I think are much more prevalent in Europe than they are definitely in the U.S., but then in other places too. You've got like enclosed malls, and then you've got open shopping centers. Talk me through that. Are those kind of standard across Europe, or do those vary as well? How do retails think about those?
You're well informed. Yes, the main focus or the main retail happens on high streets and the key markets. But again, if you look into Eastern European countries, and shopping centers have a higher importance than in some of the other countries, of course. But then if you, for example, look into Poland, then currently we see retail parks. So I think you in the US call them the big box retail spaces. Are currently high on demand for both, for retailers, but also for investors. So again, yes, it's different from country to country. And of course, also I think the weather and climate aspect plays into that.
I mean, for the European retail city profiles, which we have recently launched, we actually also came to a really interesting insight, because we looked at where the key international retailers who operate globally have their stores across the various cities. And looking at the top 7 cities in Europe, what we found is that if you classify the locations, around sort of 50% of them are located on high street locations, and 50% of them are located on within shopping centers. And what you need to sort of then think about the fact that if you take Paris, for example, it's of course a lot of the retail within the inner city is located around the high street areas, but around the periphery, you have a lot of sort of very dominant shopping centers that also appeal to local shoppers. So both formats are very important across the key European cities. And obviously, it will vary by the type of retailer, whether they appeal. And obviously, the mainstream retail brands, they sort of will have a larger presence across the city and operate in different formats. Whereas the luxury brands, they tend to prefer still the typical sort of high street areas, very defined areas. But even there, we start to see gradual expansion from some luxury brands into specific shopping center developments as well. So it is something that is well defined, but at the same time, we can also start to see some change there in that particular area.
I think the change has in common for both, whether we talk about shopping centers, high streets, or also about retail parks. It's really about the location. It's about catchment area of inhabitants, of course, of the local population, but also of tourists, and accessibility. And that is really where we see that the gap between really prime locations and let's call them B locations, where this gap is currently spreading up.
Interesting. So let's talk a little bit. There's so many opportunities. There's so many challenges. Maybe, I don't know, I'll just ask you, Josie, like, what do you think is the biggest opportunity for retailers, and what is the biggest challenge they have to overcome right now in order to succeed? What do you think?
I think really the biggest opportunity is the geographical location of most countries within Europe, which also caters very much to their supply chain. And we see also many retailers nowadays really seeing the whole expansion as one project. So in the past, we often have had different core groups or project teams for supply chain and for their own retail stores. And this is kind of merging and growing together. But also to benefit from the consumer mood. There is there are growing pockets available of consumers to spend their money. There's an appetite for them. We have seen that we have as many tourists as we never had before this year, especially during summer period in Europe. And if you also speak to the whole tourism industry, then you can expect that we will see even more tourists coming over in the next years. And there is a big movement currently on the market. So because or due to all the activities, there are currently many opportunities in renting space, or as we see, especially from some premium and luxury retailers, also to invest into property to really secure it for a longer period. And Tjard mentioned this at the beginning of this podcast. So this is currently an opportunity which we haven't seen for a long, long time in Europe. But on the other hand, what is the challenges? Yes, it's the complexity and the diversity of the markets. And we mentioned already the consumer behavior. We mentioned local laws or local regulations for rental agreements. But then there's also the data aspect, how to make informed decisions for a market. And therefore it needs us, brokers and property and real estate advisors, but also our business, I have to admit to say, is not on the same professional level everywhere. So in some countries, obviously both parties, the occupier, the tenant, and the investor, the lessor, both do have their own advisor. In other countries, they try to do off-market deals. Then again, you have markets where the broker can, we say, sit between the chairs and can advise both parties, but is not really representing any interest clearly, and commissions very, very much. So it can happen that in one country you have to pay 10% of commission of the annual rent, and in other countries it's 40%, which makes a big difference. So it's kind of a black box in terms of data and information which are available on the markets. And that is actually the challenge which both retailers and obviously also investors have to overcome.
That's fascinating. Yeah, and there's no single source for European-wide market data of the kind you would need to execute a deal. Like, it sounds to me like you really have to use a local expert to do these deals, right?
Yes, and indeed. And it doesn't matter if you look into kind of obvious data like sales, for example. There's not one source where everyone has to report its sales, so that you could use kind of benchmark data. Even so, in most of the shopping centers and in some street locations, retailers have to pay a turnover rent, but those data end up like nowhere, so are not really being used or converted again. If you look into footfall, there are so many providers who offer footfall data, but if you then look into the quality of the data, you won't end up somewhere with really great information. And that is something I could go on with all kinds of data, or just the supply of real estate. You often don't know which properties or which shops are available for rent, because many countries do have an obligation for the tenant to operate their store, so they just can't go dark. So it's hard to see or to tell if a store is available for rent or not. And there are so many information where at least we as the big firms, we as JLL and also some of our competitors, of course, try to bring some light into this black and dark box, but it needs various sources.
So what's availability like? And this for either of you, is the availability of space very limited, or is there a lot of opportunities out there to find a good location for a retailer?
Tricky question.
It also varies by market. That's more.
Correct.
I mean,
okay.
I think
So it really
no,
varies.
I think it is. We've looked at sort of the number of notable store openings across the key European cities, and what's really fascinating to see is that there was a strong uplift in demand across all the key European cities after 2022, when sort of the COVID pandemic was lifted and the retailers started opening up stores again. And one market that really jumped out, in my opinion, was Munich, where in 2023 you saw a big jump in notable store openings. But then in 2024, at the beginning of the year, you suddenly saw a notable drop again. And that's very much a reflection of there was just very limited amount of supply. Whereas if you look at the southern European markets, think about Barcelona, think about Milan, and think about Madrid, you could still see sort of a very strong upward trend. And even in Paris, where, of course, we had the Olympics in the middle of the year, there was a very strong run up through the event, where retailers were keen to open up space in sort of the tourist corridors, the big hotspots, the prime locations. And after that, suddenly, sort of now it's become a little bit more sort of quieter after this particular piece. And it's sort of just understanding those differences, that it can really make a difference at the local level, whether sort of we're seeing an increase in activity, or perhaps where some of the good spaces have already been taken.
Josie, are there? Go ahead. Yeah.
You ask your question?
Well, if you had something to add, feel free.
Just another example, Germany has an all-time high when it comes to space availability. And just as a side note, there's no official register which registers availability of retail space in Germany, like in residential or an office market, but JL has started to take it into account a couple of years ago, and now we also see some other market players following this. And just as a benchmark, if you look into the core markets across Germany, we currently have an availability in inner city locations of 17%, which is an all-time high. But when we look into the key markets, and in those key markets into the high streets and luxury streets, then it's below 5%. So there really is a high demand for that. So you can walk through some cities and through some streets, and you see obvious availability and vacancy of space. But then again, if you focus on the prime locations, then vacancy is very low. And we even see it in the rents, which are very stable in most of the markets, slightly increasing in some markets. And I think we can expect further growth in rents in the upcoming years.
Gotcha. Yeah, that makes perfect sense. So we talked about lack of data, but we do have some resources that we can offer. So let's talk about that. Tjard, you just compiled a series of city profiles that are free to download, right? So if folks head over to jll.com, they can get these European city profiles. Tell us a little bit about those.
Not only to download, if I just may quickly jump in, but it's interactive, so you can virtually explore the cities.
Oh, yeah. Well, talk about that, Tjard. That's
so
cool.
Our European retail city profiles have been designed to help retailers who are looking at Europe and trying to understand where there may be opportunities, to help to introduce what the key retail areas are. And this is really about understanding the city, the key areas. What are some of the occupier trends that we're seeing in terms of sort of who are acquisitive of space? What are rents doing? But also understanding, helping to provide insights around the size of the opportunity, like how many stores do some of the potential peer brands or competitors have within each respective market and where they're located. And whilst this is only sort of a part of the bigger puzzle, trying to solve and making sure that you have a very resilient and successful store portfolio, this is a very important piece because it already helps you to sort of understand where you need to focus on, what the opportunity could be, and help to try to speed things up. And this is a tool that we've just launched. We've released it on our jll.com website, where you can leave your details behind. Then you get access to our sort of, we call it the light version of our European retail city profiles. They are enough to give you sort of a very strong insight in how the retail markets are organized. But if you would like more detailed insights, then we would welcome everybody for a one-on-one conversation where we can have a more in-depth discussion around why certain retailers are opening up specific stores, rents that are being paid, and also where we think the next opportunity or the next steps for expansion could take place. And that's something that we would welcome clients and everybody interested to do so.
Excellent. So, Tjard, as you were compiling all the information for these city profiles, was there any city that had seen a big change where you said, oh boy, we didn't see this much activity the last time we did this, or anything new that popped out at you as different as you were doing the research?
Well, a couple of things that really popped out to us is, first of all, is that retailers have been very focused on prime locations, tourist corridors, very strong demand for sort of making sure that they have exposure towards also international tourists. and well-connected retail places. They were the areas that really popped out, but we can now start to see that retailers are broadening their focus, and that's something that we have seen over time. That sort of with after sort of they initially secured space in the best locations, they started to broaden their focus. The second thing that we've noticed that a large proportion, and in some cities, it would range from 40 to 60% of the total leasing volumes came from international retailers looking to expand into new markets, looking to secure new space, and very much taking the current market opportunity conditions as an opportunity to improve their store portfolio, the store footprint, and making the most of this. And another sort of trend that really stood out, and that's already sort of being noticed for the past 2 years in Germany and in some other European cities, but now sort of also gradually broadening, is that some retailers, they want to open up much bigger and better stores. And this is sort of, they're looking for larger units to secure, because they very much believe that they can offer better experience to their customers, whether it's the products that they're offering, introducing click and collect, or the overall experience that they can provide. And those are some of the trends that are really coming to the fore when you look at some of the activity and the numbers that are taking place and that we have observed.
Gotcha. Fascinating. So Josie, we are quickly approaching the big annual MAPIC conference in the end of November, which is in Cannes, right? I totally blanked for a second. Yeah. November, probably not the time to be on the beach.
Probably not.
In France. So you're going to be inside working. You're not going to miss out on anything. So we have planned a series of these city-specific podcasts. This is kind of a kickoff. What do we have? What other cities are we going to dive into in the coming weeks?
Yes, so watch out for the new series if you want to learn more about, well, let's start with France. Actually, MAPIC is in Cannes. So if you want to hear more about Paris in France, about London, but then we also have a series dedicated to Spain for the cities of Madrid and Barcelona. We talk about Milan in Italy. And then, of course, we mentioned it already several times about Munich and Berlin in Germany. So
Excellent.
It's a series of the top 7 markets, or the big 7 markets we currently see in Europe, not underestimating some other cities, and hopefully can launch a few more city profiles over the next months. No pressure on you, Tjard.
So tons of resources out there. The city profiles, again, at jll.com. We're going to be doing podcasts coming out most Thursdays leading up to the big MAPIC conference. So hey, just listen or watch to the podcast, and you'll be ahead of the game. Well, thank you so much, both of you, for joining me today. This has been a great conversation, and I'm getting excited about learning more about the European cities in the coming weeks. This is going to be a lot of fun.
Thanks for having us, and I can tell you our colleagues are excited as well to talk about their local markets. Will be insightful.
Thank you, James.
Excellent. And for folks out there, if you want to hear everything and you don't necessarily want to see it, I'm going to recommend that you subscribe to the Where We Buy podcast. It's on every podcast app. It's on Spotify. Just search for Where We Buy and hit subscribe. And again, if you want to see our latest research, head over to jll.com. And if you have a specific question about retail, shopping centers, or retail real estate, feel free to connect with me on LinkedIn. Just search for James Cook, JLL.